The cost of goods manufactured statement is a financial report for internal management. As the name implies, it shows how much goods is manufactured in the period. Before we learn how to prepare the cost of goods manufactured statement, I need you to recap the three types of inventory held by a manufacturing company as covered in the video on FRS 2 inventories. They are the raw materials, work in progress, and finished goods. Raw materials are materials or supplies to be consumed in the production process. Work in progress are assets in the process of production for sales. Finished goods are assets held for sale in the ordinary course of business. So this is the three states of inventory for a manufacturing company and how each state of inventory flows from one state to another. Raw materials will increase when more materials are purchased and when freight charges are incurred on purchasing the materials. It will decrease when the raw materials are used in the production process. This decrease in raw materials will increase the work in progress. Besides material costs, labor costs and other product costs will increase the work in progress. When these inventories completed the manufacturing process, it will exit the work in progress and join the finished goods. Finished goods will decrease when it is sold. So this is the rough idea how the cost of goods manufactured statement works. Essentially, we want to account for how one state of inventory is transformed to another state. As we have seen earlier on, raw materials increase due to purchases and freight charges on the purchase of raw materials. It decreases when they are used in the manufacturing process. Normally, we know the raw materials purchase, freight charge, and the beginning and ending raw materials. And what we want to find is the raw materials used. So, rearrange the equation, and this is how we find the raw materials used. I need to caution you though that this raw material use figure includes both the direct materials used and the indirect materials used. So if you want to find the direct materials used, you ought to subtract the indirect materials used. Work in progress will increase when direct materials are used in the production process and when the company incurs conversion costs, which are labor costs and factory overhead costs. Please note that factory overhead costs refer to any indirect product costs like indirect materials, indirect labor, and other product costs. Goods that completed the manufacturing process will exit the work in progress. We can use the direct materials used figure computed earlier on, and we know the labor costs, factory overhead costs, and the beginning and ending work in progress balance. So we want to find the cost of goods manufactured. Rearrange the equation like before, and this is how we compute the cost of goods manufactured. If you put together the analysis of the raw materials and work in progress accounts, this is how the cost of goods manufactured statement looks like. One question you are probably wondering is, must I follow this format strictly? The answer is no. This is a document for internal reporting. It will not be publicly published. Therefore, you can tweak the format here and there. Just make sure you present the statement in a way that can be easily understood. How do we find the cost of sales then? We need to analyze the finished goods account. When the goods complete the manufacturing process, I told you it will exit the work in progress and join the finished goods. Finished goods will decrease when the goods are sold. We computed the cost of goods manufactured figure earlier on, and we know the beginning and ending finished goods balance. So to find the cost of sales, just rearrange the equation like always.